Good day, everyone. Garrett Moore here. It is indeed time for another State of the Markets update. I want to share with you all a little bit about what is going on, why it is going on, and a little bit of guidance as well. So jumping right in, this is a chart of economic policy uncertainty. You can see our current state over at the far right, and you will note that we are at levels that are exceeding the coronavirus pandemic, and we are at levels that are exceeding the 2008 global financial crisis as well. Of course, this is all due to the recently announced tariffs and the retaliatory tariffs by China and what is shaping up to be potentially another trade war between the two nations. All right. So when it comes to investing, what we're really trying to do is make an educated guess as to the future earnings of the companies of the world. And once we've done that, we can determine a reasonable price to pay for a share of each of those companies. Okay. But with so much uncertainty going on in the world, that exercise becomes incredibly difficult to do. In the market declines that we've seen the past 3 days are really just an acknowledgement of that fact. Okay. This is a chart of market corrections and recoveries since World War II in the U.S. stock market. When we look at this, we find that the average correction is 14%. So as of today, the U.S. stock market is about 17% off its all-time highs in February. Okay. What we also find is that the average recovery takes about 4 months. Okay. To be frank, I think that this recovery is going to take longer than 4 months, perhaps substantially longer. But this is ultimately the question that every investor faces right now. All right. So this chart covers the past 25 years, and it basically denotes your account value under two situations. Okay. In both situations, you invest $1,000. In the left-hand column, it tells you your average account balance had you simply remained invested. If you just held through thick and thin, what would your account value be at the end of this exercise? Okay. The column on the right is your average account balance had you sold and simply stayed out of the market for 1 month and then gotten back in. All right. That sounds pretty innocuous, especially when we're all looking for a little bit of relief from the angst and the anxiety that we're feeling over everything that's going on in the world. However, if you look at the figures, you will note that selling and staying out for 1 month more than halved your account balance at the end of this period compared to having stayed invested. And like I said, this is the question that many of us are asking ourselves right now. And I would strongly encourage you to use history as your guide, which is succinctly summarized in this chart here. If history is any guide, being patient and staying invested is the clear winner if our objective is to build as much wealth as possible over time. Okay? But like I said, feeling that angst, that anxiety is perfectly understandable. I think we all are at this point. So if that's you, I invite you and encourage you to use the link below to schedule some time on my calendar so that we can just talk this out. All right. I hope that was helpful. Let me know if there's anything else, and I appreciate your time today. I'll talk to you soon. Thank you. Bye-bye.